So hey everyone, I am CA Khandelwal and I think we are live. Please check and let me know if the audio and video is proper. And am I live? Just please let me know. And am I live? I am waiting for a message, guys. Please let me know. Yes? Is it live? Okay. All is proper? Okay. So guys, this revision class is 100% in English. So we are revising PGBP today on the demand of our South Indian students, my dear South Indian students who wanted me to take revisions in English. I am starting a series in which I am trying to take revisions in English. So today is my first ever lecture in which I am teaching in English. So pardon me if I am not I use some Hindi words in between, please pardon me, but I'll try to use English words for 99% of the time. I have never taught in English, but we have to take a first step always, right? So I am taking it. So just because of my South Indian students, because many students were requesting from me for a long time to take revisions in English, right? Okay, so guys, I am CA Yash Khandelwal. I am a CA and I have been teaching DT for last 2 years. Okay, and you all have been sharing a lot of love and blessings to me, and I hope you will be doing it in the future also. Next, if you want any updates regarding our videos and notes and everything, you can join our Telegram channel. The link is in description. And if you want any classes, from Unacademy, you can go for Plus subscription, in which you get live classes, weekly tests, structured courses, and unlimited access. And if you want personal guidance and study material, you can go for Iconic subscription, right? So and right now there is an offer in which 20% off is going on. So you can use my code CAYASH to get 20% off. And if you want to take any subscription on Unacademy, you can use my code CAYASH. Okay. So without wasting any much time, let's start with PGBP. Are you guys excited? Are you guys excited? Tell me in the comment section. Okay. Volume, do I need to increase volume? Please tell me now, is it okay? Just a minute. Now it will be okay. Okay, let's start. So first, in the chapter 2 PGBP, the first section we are going to study is charging section, that is section 28. In section 28, what we'll study, all the following income shall be taxable under that PGBP. So basically it is charging section which tells which incomes come under the section PGBP and which incomes are taxable under that PGBP, right? So all the following income shall be taxable under that PGBP. First, any profits or gains of business, profession or vocation. Business, you understand. Profession, you understand. And vocation is in which you apply your skill, like singing, like dancing. It is a vocation where you are applying your skill and earning income out of it, right? Second, any amount received by employer being assessee under a Keyman insurance policy. So if under Keyman insurance policy, if employer is receiving any amount, it is taxable under the PGBP. If employee is receiving it, employer director, then it is taxable under that salary in the hands of employee. And if the family members of the employee are receiving it, then it is taxable under that IFRS, right? And when we take and this is taxable because when we take insurance in the name of Keyman, then when we pay premium, we get reduction of the premium, right? Okay. Second, next, any gift or benefit or perquisite received due to business or profession. In business, if you receive any gift, any perquisite, any benefit, it is taxable under that PGBP, right? Fourth, now there are some import incentives which are given by the government which are taxable under that PGBP. So I have summed up all the import incentives in one place, right? And I've made a chart out of it. So first is profit on sale of import entitlement license. Sir, what is import entitlement license? Um, when you do a lot of exports, right? So government, to incentivize you, gives import entitlement license, in which you can import freely without paying any custom duty. Okay, so, and that license which gives you right to import any item custom free, you can also sell it. So on if you sell it, the profit on sale of import entitlement license is taxable under that PGBP, right? Next, any cash assistance received. Next, any duty drawback received. When you receive duty drawback, it is also taxable under that PGBP. Profit on sale of DPB and DFRC. So what is DPB and what is DFRC? Duty entitlement passbook scheme and duty free replenishment certificate. So basically, what government do is they give you some import incentives. When will they give you? When you are exporting things. And if you are exporting things, you will receive some import incentives, and that import incentives are taxable under that PGBP, right? Which are given here. So you have to just read it twice or thrice. You'll remember it. Okay. Any non-compete fees received for not carrying out any business. First, for not carrying out any business, and second, for not sharing any know-how, patent, corporate, etc. Okay. When you receive any non-compete fees, when any person is telling you to not to do business, when any person is telling you not to do any particular business, that, for example, I have a sweet shop, right? Sweet shop. You are my employee. If you are resigning, I'll tell you that for next 5 years you cannot do sweet business. Why I'm doing this? Because I know you know all my business secrets. You'll go out and open your sweet shop, and then you will hamper my business. So what I'll do is I'll ask you not to do a business for 5 years. Will you agree to it for free? Will you agree to it for free? No. You will say, sir, no, 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 no. We will not agree for free. We need some money for it. So if I will pay some money to you, I will pay some money to you, then in your hands, that non-compete fees is taxable under that PGBP, right? And it can be for not carrying on any business, and for not sharing any know-how, patent, corporate, etc. Right. Now you also must note that the person who has paid non-compete fees can treat it as intangible asset and claim depreciation at 25%. Like me, what I can do, I can claim the non-compete fees. The non-compete fees is intangible asset for me, and I can claim depreciation at the rate 25% on it, right? Okay. FMV of stock in trade on the date it is converted into capital asset. The date on which a stock in trade is converted in capital asset, right? The FMV is taxable under that PGBP. Any compensation received or receivable terms and conditions of contract relating to its business, always PGBP, whether revenue or capital. So when any termination or modification of any terms or and conditions of contract happens, like you had a contract with someone to supply certain material, okay, then if you terminate it or you modify it, that you will not be able to supply, or you will supply after 20 days, 30 days, in that case, if any compensation is received or receivable by any person, in that case, okay, that is always taxable under PGBP, whether revenue or capital, no matter what. Okay. Next, income derived by a trade, professional or similar association from specific services performed for its members. Okay. When a trade, professional or any similar association performs specific services for its members, then the income derived from it is taxable under that PGBP, right? So beta, guys, section 28, we have done the 9 points in 28. Now we'll understand some definitions of speculative business, and next we'll do section 30 and 31. Okay. Before going ahead, please let me know your feedback. If you are getting it, what should I do? Should I increase the speed a little more? I'm trying to explain things in the deep, but I can do it fast also. So please let me know, what should I do? Is the speed fine to you, or please let me know in the comment section. I'll wait for a minute, okay, before going ahead. Guys, I'm waiting for your comments in the comment section, right? So please let me know if you, because it is my first lecture, so I'll need a little cooperation from you to understand well what do you exactly want from me. I'm waiting for your comments, right? It's fine. Can increase a bit. Okay, I'll increase a bit. Okay, thank you. Next is speculative business. So what is speculative business? So I've made very beautiful notes in which we say transaction in which a contract for purchase or sale of any commodity, including stock and shares, it happens, and it is settled otherwise than by actual delivery or transfer of commodity or scripts. It is settled otherwise than by actual delivery. Delivery is not done. That's why it is called speculative contract. And they are called speculative transactions, and the business is called speculative business. Okay. Transactions not deemed to be speculative. Few transactions are not deemed to be speculative. Please note. Hedging contract of raw materials, shares or merchandise. It is not a speculative contract. Okay. Okay. Forward contract is also not a speculative contract, and derivatives trading through recognized stock exchange. It is also not a speculative contract. Now let's see speculative business for a company. Now, if a company is part of business, if a company's part of business consists of purchase and sale of shares of other companies, if company's business consists of purchase and sale of shares of other companies, that part of business is speculative business for the company. If any company purchases and sells shares of other companies, then that part of the business is speculative business, right? Business not deemed to be speculative for company. Which are the businesses? Company whose income, that is gross total income, mainly consists of house property income, interest on securities, capital gain, IFOS. Okay, so company whose gross total income mainly consists of house property income, interest on securities, capital gain, IFOS. Right. So basically, the companies which do not have PGBP income, mainly, they have other income only. They don't have PGBP income. For that company, selling and purchasing of shares is not speculative business. Okay. Second, companies whose principal business is trading in shares, banking and granting of loans and advances. The company whose principal business is only trading in shares, banking and granting of loans and advances, then it is not speculative because it is the main business of the company, right? Note, the revenue receipt is taxable in PGBP and capital receipt is not taxable in PGBP. Revenue receipt is taxable in PGBP and capital receipt is not taxable in PGBP. Similarly, the capital expense is not allowed in PGBP. Capital expense is not allowed in PGBP, right? So capital receipt is not taxable. This is generally not taxable unless it is taxable under a specific provision of the act. If it is given in any specific provision that it is taxable, then only it is taxable. Otherwise, it is not taxable. Right? Okay. So let's move ahead. Next section, section 30 and 31. Rent rate, taxes, repairs and insurance of building, insurance and repair of plant, machinery and furniture. Right? Now, in section 30, we'll understand if rent, insurance, revenue, repairs, rates and taxes, capital repairs, is it allowed for building. In section 31, we'll study it for plant and furniture. Okay. Hi sir, good evening. Thank you sir, but one small request, please increase the little speed. Okay, can I increase the speed? I have no problem. I am trying to do it slowly because I'm not very comfortable teaching you guys. I'm doing this for it for the first time, right? So I don't know which speed is comfortable to you. So if you are giving a feedback that I should increase the speed, then I'll increase the speed. No issues. Okay, let's do this. So section 30. In section 30, rent is allowed for building, and 31, plant and machinery, plant and furniture, it is allowed, right? Insurance is allowed for both. Revenue repairs is allowed for both. Okay, rates and taxes is allowed for building but not for plant and furniture. Now you will say, sir, why rates and taxes is not allowed for plant and furniture? Because for plant and furniture there are no rates and taxes. There is no municipal tax for plant and furniture, right? For building there are municipal taxes. That's why it is allowed here and not allowed here. Okay, and for capital repairs both are not allowed here. It is added to cost of asset. It is added to cost of asset. Okay. Rent is only allowed to tenant. It is not allowed to owner on notional basis. Please make note that. Please make a note of it. What? Rent is only allowed to tenant. The owner cannot say, if I have the owner of the building will say, if I would have rented a building, okay, then I would have paid rent. Now I'm using my own building, so I should pay rent to myself. So I will take notional rent. No, 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 no. It cannot happen. So it is only allowed to tenant, not allowed to owner on national basis, notional basis. Other expenses, same for owner tenant, allowed to both. And other expenses are same for both owner and tenant. It is allowed to both. Okay. Capital repairs by tenant. If owner is doing capital repairs, then it is included in cost of asset, and it is and depreciation is given on it, right? But if capital repairs is done by tenant, if tenant is doing capital repairs, then it is called deemed building. And for that capital repair part, depreciation is allowed to tenant. For example, if a tenant makes a capital repairs of 10 lakh rupees, then we'll make an asset, we'll record an asset in the books of the tenant of 10 lakh rupees, which will be deemed building, right? And depreciation will be allowed to him. Okay. If as per the rent agreement, tenant is not under any obligation to incur revenue repairs, but he incurs such expenditure for carrying on his business efficiently, then that expense will be allowed under section 37. This point will come in the question to you. See, in the question, what will be given to you? That as per the rent agreement, the tenant is not under any obligation to incur such expenses, but tenant has incurred the expenses. Now the question is, will you allow it or will you not allow it? Will you allow it or will you not allow it? Because the tenant is under no obligation. He is doing it on his own, according to his own will. So it is given in a question, and it is a case law, that if as per the rent agreement, tenant is not under any obligation to incur revenue repairs, but he incurs such expenditure for carrying on his business efficiently, then that expense will be allowed under section 37, right? Firm pays rent to partner, allowed if reasonable, and excessive rent will be disallowed. Okay, firm pays rent to partner, allowed if reasonable, and excessive rent will be disallowed. It will be disallowed under section 48(2), right? 48(2). We'll study. Don't worry. We'll study. Okay. Now we are starting with section 32, guys. Before going ahead, I just want to say, see, I get a very good response on Hindi revision videos. You must have seen it. So for me, it is a very easy option not to do English revisions and continue my Hindi revisions, which I'm already doing and which I'll continue doing. But I'm taking out time and doing this English revisions because some of the South Indian students have demanded it, right? And they are demanding it for a long time. They're requesting a lot. So I'm doing it for the sake of my dear South Indian students. So please if you are a South Indian student and you are watching it, and if you find it useful, please share this lecture to the students who needs English lectures, right? Who don't understand Hindi completely and want the lectures in English. You can share these lectures to them. Okay. And for me, a motivating factor will be if I'll get a good response on it. So I'll conduct more revision sessions. You understand? Now, right now, what is my plan? I'll take 4 to 5 lectures of important topics in English, right? For South Indian students, for you guys. Okay. So I'm doing it because you wanted it. Otherwise, I have a very easy option not to do it because I've never done it and I've already a lot on my plate to do right now. But I don't want any student who wants to study from me to how can I say, I don't anyone not being able to study from me, right? Who wants to study but not able to study due to language barrier. That's why I'm doing this. Okay. And I've not done this in front of camera. I can speak in English, I can talk in English normally, but to do it in front of camera is little difficult for us, the North Indian people. And I have been raised in an environment where we don't talk in English much. We talk in Hindi all day. And I teach for 5 to 6 hours daily in Hindi. So I'm very much used to it. So I'm just doing for you guys. So please make sure if you like it, please share it with people. So it will be motivating factor for me and I will do more lectures for you guys. Okay. Okay. Yes. Okay. Let's do depreciation. Section 32. Depreciation method. There are two methods of depreciation, SM and WDV. Okay. So WDV is applicable to everyone. Everyone can apply WDV method, but SLM is only available to business of generation of power or generation and distribution of power. The assessee having business of generation of power or generation and distribution of power. Only this assessee can opt for SLM. Okay. Now, it is a once in a lifetime option. In the first return, they have to choose. This assessee have to choose whether they want to opt for SLM or WDV. If they want SFM and SFM, I'm saying SFM, sorry. If they want SLM, okay, so they have to do it. They have to opt it before due date of first return. If in the first return they opt SLM, then in the whole life of the company, of the business, they cannot opt for WDV. It is only once in a lifetime option. Okay. Now classification of block of assets. There are 4 blocks. First block building, second block furniture, third block plant and machinery, and fourth block intangible assets includes know-how, patent, copyright, license, franchisee, non-compete fees. Okay. So intangible assets contains includes know-how, patent, copyright, license, franchisee, non-compete fees. It does not include goodwill of business and profession. It does not include goodwill of business and profession, right? It is an amendment which we'll study today. Now, conditions to claim depreciation. So claiming depreciation is mandatory. It is not like I don't want to claim depreciation. No, it cannot happen. You have to claim depreciation no matter what, right? Asset must be used for the purpose of business and profession, active or passive. Okay, so for claiming depreciation, you must use the asset. Asset must be used and it should be put to use. And when you put to use the asset, then only depreciation is allowed. Okay. Okay. But ready to use is not allowed generally. If you have made an asset ready to use, the depreciation is not allowed generally, but it is allowed in special circumstances. It is allowed in special circumstances. What circumstances? Tell me. Example, if you have a standby machinery, it will always be ready to use. It will be put to use when you need it. So it will always be ready to use. Emergency spares, fire extinguisher, etc. So on these machineries, in these special circumstances, a ready to use will also be allowed. But for other assets, put to use will be allowed only, right? Assessee should be owner of such asset wholly or partly. Okay, there are 2 points in this particular line. First is owner of the asset. The assessee should be owner. And now, by ownership, what we mean? Registered ownership is not mandatory. No. Beneficial owner can also claim depreciation. If you are beneficial owner also, then also you can claim depreciation. Registered ownership is not at all mandatory, right? Partly, if partial ownership, then proportionate depreciation will be allowed. Okay, and you can be owner wholly or partly. If you are 50% owner of the asset, then you will be allowed 50% depreciation. Okay. Now let's talk about lease and hire purchase. In case of lease, who claims depreciation? Lessor claims the depreciation. Lessor. It is lesser, but we call it lessor. Okay, so lessor always claims depreciation. In case of hire purchase, when is ownership transferred? That it is transferred after the last payment of installment. Ownership is transferred after last payment of installment. But depreciation can be claimed by hire purchaser from the beginning of hire purchase. Yes, this is a good point. That depreciation can be claimed by hire purchaser from the beginning of hire purchase. Right? Okay, now we'll study rates of depreciation. What are the rates? 10%, 15%, 20%, 25%, 30 and 40. Okay, what I've done is I have bifurcated the depreciation items by rates. Okay, I have separated rates according to rates. So in 10% you have 2 things, building and furniture. 15% you have plant and machinery, motor vehicle, normal, oil wells, and windmills installed before 1/4/14. Okay, in ships you have 20%. Okay, intangible assets you have 25%. 30% motor vehicle used for hire. Normal motor vehicle 15%. Motor vehicle used for hire 30% depreciation. Because it runs a lot, right? If it is on hire, it will run a lot. For personal use, it will not run that much. But if it is for hire, it will run so much. Okay. So 40% is for computer, laptop, aircraft, books, any pollution control equipments, temporary buildings, and windmills installed on or after 1/4/14. Okay. Akansha, you cannot get these notes. You have to buy it. Okay, this is my book. The notes are from my book. You have to buy it. Okay, it is not available on Unacademy. It is available in the market. You can buy it. Motor vehicles, business of running them on hire 30%. Other vehicles normal 15%. Okay, this is in normal circumstances. But if your motor vehicle is acquired and put to use between 23/8/19 to 31/3/20, if your motor vehicle is acquired between 23/8/19 to 31/3/20, then for normal vehicles it will be 30%, and for hire vehicles it will be 45%. For vehicles that are on hire, for it will be 45%. So you have to remember these dates: 23 August 19 to 31/3/20. For buildings, residential 5%, general 10%, and temporary 40%. For mobile, EPABX, not computer, 15%. Mobile and EPABX is not computer, it is mobile. So you'll have a rate of 15%. UPS, printer, scanner, and other accessories. UPS, printer, scanner, and other accessories, it is computer, it is part of the computer. It will be 40% depreciation. Okay, for them it will be 40% depreciation. And this is a definition of plant and machinery. Plant and machinery includes ships, vehicles, books, scientific appliances, and surgical equipments. Okay, does not include tea bushes, livestock, building furniture. Tea bushes, livestock, building furniture. If asset is used for less than 180 days, half rate depreciation is allowable. Okay, cutoff date is 3rd October. So if asset is purchased on or after 4th October, if it is purchased on 4th October or after 4th October, half rate of depreciation will be allowed. 3rd October is cutoff date. From 4th October, it will be 180, half rate. Okay. Now the provision of use for less than 180 days is applicable in the first year only. This provision is applicable for first year only. Example: if asset is acquired in previous year 2021. Okay. you have not used in previous year 2021. It is not used in previous year 2021. It is directly used in, it is put to use in previous year 21-22. So it is put to use in second year, not the first year. Now, will you see the condition of 180 days for second year? No. You put to it on any day in next year. It will be given full rate of depreciation. Half rate is not given there. See, again I'm saying it. If you acquire it in previous year 2021, okay, and you have not used it in previous year 2021, and you put to use it in previous year 21-22, what will happen? Now, suppose in previous year 21-22, you use it for less than 180 days. You use it for less than 180 days. What will happen? Will half depreciation will be allowed or full depreciation will be allowed? So, full rate depreciation will be allowed, because this proviso of half rate is not applicable to second year. It is applicable to first year only, right? Next, unabsorbed depreciation. Unabsorbed depreciation can be set off against any head of income. Unabsorbed depreciation can be set off against any head of income except salary, and can be carried forward indefinitely. It can be carried forward indefinitely. Okay. Next we'll study beta additional depreciation. Before that, give me 30 seconds break. Okay, 30 seconds. You also drink water. Give me 30 seconds break. Hi guys. So next we are starting additional depreciation, right? So is it clear to everyone? Till now, is it clear to everyone? Yes. Okay, okay, okay. Great. Okay, let's go ahead. Chalo. So additional depreciation is only allowed on plant and machinery. Please note it. Sometimes we are confused. Is it allowed on any other assets? It is only allowed on plant and machinery, and it is only applicable to few assessees. It is only applicable to few assessees. Which assessee, sir? Which assessee? The assessee engaged in the business of manufacture, production of article or things, or generation or distribution or transmission of power. Okay, so applicable only to 2 SSC. Which 2 SSC? Sir, manufacture or production of plant and machinery. Manufacture or production of article or things, and generation or distribution of or transmission of power. Okay. Next, sir, rate of additional depreciation is 20%, right? Notes: additional depreciation is allowed in the first year only. It is allowed in the first year. You will not get additional depreciation every year. It will be allowed in the first year only, right? And if used for less than 180 days, half rate is applicable. If the asset is used for less than 180 days, then half rate is applicable. 10% allowed in the current year, and balance 10% allowed in the next year. Okay, this is important. 10% will be allowed in the current year, half it, and the remaining 10% will be allowed in the next year. Okay, it is not allowed on SLM method. Not allowed on SLM method. So additional depreciation is allowed on printing or publishing and printing and publishing of books considered as manufacture production. Note, 115 BAB is not allowed on this. Please note it. See, this is a very tricky point, a very important point. So for printing and publishing of books, it is considered as manufacture for the purpose of additional depreciation. Okay, and additional depreciation is allowed. So printing is considered as manufacture. Printing is considered as manufacture for the purpose of additional depreciation. For the purpose of additional depreciation. That's why for this business, additional depreciation is allowed. Right? But you remember section 115 BAB? Remember it? Section 115 BAB. It is allowed to new manufacturing companies. Okay. So for any company which is involved in printing of books, 115 BAB is not allowed, because printing is considered as manufacture only for the purpose of additional depreciation. Very tricky point. Please make note and please mark it important. It is given in RTP 21 November 21, question number second or third question. It is second or third question of RTP, right? From the subjective question, RTP November 21, last year. Okay, please make sure you note it. Additional depreciation is not allowed on second-hand plant and machinery installed in office or residence. Okay, ships, aircraft and transportation vehicles, and plant and machinery on which 100% deduction is allowed. Okay, for these four things, the additional depreciation is not allowed. Forklifts, truck used in the factory. So generally you see any transportation vehicles, for any transportation vehicles, additional depreciation is not allowed. For any transportation vehicle, additional depreciation is not allowed, right? But the forklifts or truck used in factory, it is not a transport vehicle. It is not a transport vehicle. So additional depreciation will be allowed. Not a transport vehicle, right? Special cases of depreciation. Depreciation is case of amalgamation, demerger, conversion of company into LLP, and succession of firm, proprietorship by company. In these three cases, how will we calculate depreciation? The question is, how will we calculate depreciation? So, depreciation is calculated for the whole year. It is calculated for the whole year. As if nothing has happened. We'll act like nothing has happened. We'll say no. We'll calculate depreciation for the whole year normally. For the whole year, we'll calculate it normally. Then that depreciation is distributed between predecessor and successor in the ratio of number of days assets were used. You will find the third question in the PGBP chapter, CA Limited, Schedule Limited, right? Okay, so first what will you do? You will calculate depreciation for the whole year, right? As if nothing has happened. Then you will distribute the depreciation into predecessor and successor, between predecessor and successor on the in the ratio of number of days used by them. Okay, now tell me one thing. At which value do you calculate depreciation? At which value? So normally what we do, we need cost to calculate depreciation, right? On the cost of the asset, we normally calculate depreciation on the cost of the asset. So section 43(1) actual cost, section 43(1) actual cost is a section which tells you what is the actual cost of the asset that you have to take for calculating depreciation, for the purpose of calculation of depreciation. Okay, section 43(1) actual cost. Actual cost of the asset is calculated as follows: purchase price, right, plus installation, transportation and trial run expense, interest on loan up to put to use. Okay, the loan up to the loan, suppose you have taken a loan on the asset, so the interest you are paying, the date till it is put to use, the interest for the period you have to, let's take an example, you have taken loan here, okay, you are putting the putting to use asset here, so in between, for this period, the interest on that loan will be capitalized. The interest on that loan will be capitalized, right? Purchase price plus installation, transportation and trial and expense, plus interest on loan up to put to use, plus taxes and duties if ITC is not available. If ITC is available, then it will not be included in the cost. If ITC is available, ITC if available will not be included in the cost. But if it is not available, then will include in the cost. Either you can take depreciation or you can take ITC in income tax, in GST, right? Will deduct subsidy grant received by the government. Subsidy or grant received by government will reduce it. And if we do trial run and we earn any income, then amount earned by selling trial run production, okay, amount earned by selling trial run production will also be deducted, and actual cost of the asset will be found, right? So now on this actual cost we'll calculate the depreciation. Now on this actual cost we will calculate the depreciation. Now please note that this is a point from section 48(3)(a). If payment for purchase or expense of asset, okay, if payment for purchase or expense of asset to a single person in a single day, to a single person in a single day is greater than rupees 10,000, is greater than rupees 10,000 by cash, bearer check or cross check, etc. Okay, so you are doing it by cash, bearer check or cross check greater than 10,000, then such payment or expenditure shall not form part of the actual cost of the asset. Then such payment or expenditure will not form part of the cost of asset. Okay, so you have, what is government trying to do? They are trying, if any payment is more than 10,000, it should be done by only account pay checks or through Beam, UPI, through Google Pay, Paytm, NEFT, RTGS, so that the government has a trail to track it, right? Now there are some special cases which are given and the actual cost is given. First is asset used in scientific research. So already 100% depreciation is for scientific research, the asset used, for the asset used we get 100% deduction already in section 35. So actual cost will be nil because we will not take depreciation again on it. Okay, section 35 AD asset nil, actual cost. Okay, asset acquired by gift will. So asset transferred by holding company through subsidiary company, amalgamating company to amalgamated company, or demerged company to resulting company. WDV of previous or preceding owner. What will we take? WDV of previous or preceding owner. If asset is acquired by gift will or transferred by holding company, amalgamating company, and demerged company to subsidiary company, amalgamated company, and resulting company, what will we do? We will take WDV of previous owner. Stock converted into capital asset and used in business. FMV on the date of conversion. FMV हो जाए यार. It's not. I don't think it's streaming. So guys, I'm doing. I'm recording it. So what we'll do is we'll take a part 2 of this particular lecture tomorrow or day after tomorrow. We'll try it tomorrow. Tomorrow I have scheduled capital gain for you. So we'll try to take it day after tomorrow. I'll try. Okay. So I don't know if you see this, what I'm saying or not, but we'll name it as part 1 and we'll do part 2 of PGBP as well, in which we'll do from onwards from here. right? So we'll complete it. Thank you. Sorry, I don't know what happened, but I think and right now also video is not recording. Of what, I don't know. So what will I do? What I'll do is I'll reschedule the lecture and we'll do it day after tomorrow or something. We'll do capital gains tomorrow. Okay. Okay. So thank you. Bye bye. See you.